Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, I want to discuss the 3 things that new investors should absolutely avoid. And when you come across one or more of these things, you need to run as fast as humanly possible in the opposite direction. And I mean that, as fast as humanly possible when you come across one or more of these things, okay? So the first thing is overconfidence. And I will tell this story to you like this, and really it's more of a story of my own life, okay? So I started building bread in 2010. So I've been doing this, by the time you're watching this, about 12 years, okay? I've gone to school for this, I've gotten degrees for this, I've managed over $140 million, and I still do my research. And at no point, and y'all know this, at no point do I declare that I'm perfect or that I have figured everything out. However, I run into people every now and then that says, look, I have mastered the stock market. I understand everything there is to know about said category, and follow me for more tips, right? And that's overconfidence, okay? You do not know, neither do I. You do not know what's going to happen tomorrow in the stock market. And by tricking yourself into that, you are definitely taking a long walk off a short cliff. If you don't know what that means, pause it, think about it for a minute, you'll run into it. But in either case, that is something that is extremely dangerous for anybody, but especially for new investors, because when you are new, you don't know what you don't know. And the other thing too is, again, when you are new, you have a very narrow time frame of what you can compare things to. So for example, I've been doing this since 2010. That means I've been through some things, not everything. I wasn't around through the Great Depression. I wasn't around to really invest through the Great Recession. So I don't have all of the knowledge in the world. No one does, right? But if you just started investing in 2020, you only have 2020 to kind of go back to. You don't know, you are in the market for what happened before that. And I've seen this in my own comment sections. I say, this is the worst stock market ever. I started investing in November of 2021. I'm like, great, congratulations for starting to invest. But that's not even the worst year ever. In fact, in 2021, the stock market was up like 23.6%, if I remember correctly. I'll put that here just to double check. I'm doing that from memory. But I can tell you it was up over 20% in 2021. That ain't bad, okay? Now, you may have started in November, which the market did start to fall off a little bit. But even so, look at what the stock market is now, especially after July of 2022. You don't have a whole bunch of context, right? So you can't say that you understand 100% of everything when you've only been through but a few markets. And I really want to emphasize this. I have not invested through every single market, and I'm not the one that said I've mastered everything about investing. So be very, very careful for overconfidence. Stay humble. And if not, the stock market in time will humble you itself. And it is not a fun experience. It's also why that I still allocate a good chunk of my money into index funds. Because if I'm wrong about a stock, hey, I still got my index fund. That's what's going to back me up. And it's also why when I invest, I try to limit my holdings to 5% or less. Because if I'm wrong about a stock, that's not my whole portfolio. I'm not going to fall off a cliff by putting 50% of my money and I'm Netflix, because the TV is on here, or something like that, and lose 70%. I can't stomach that. Now, if it's only 5% of my portfolio and it drops 70%, I'm not going to be happy, but hey, it is what it is, right? I have other things to support my portfolio. So number 1, please, please, please avoid overconfidence. The next one that I see people run into is dividend chasing or chasing dividend yield. Now, I've gone through and done a video on dividend yield and what I call the dividend yield trap. I will post that right here to go in detail there. However, what I do see is, let's start here. Let's talk about what a dividend is, and then talk about why it could be a mistake to just chase dividends and try to chase companies that just pay a dividend. So a dividend is basically when a company does well, they share their profits directly to you in a cash profit. So if you own 1 share and they're paying $1 dividend, you're getting $1 for every share that you own, which is fun because that is a way of passive income. You get enough shares, you can get some pretty solid dividend checks. The problem is, just because a company pays a dividend doesn't make it good, or that the dividend is going to be permanent. Now, there are companies like Home Depot and Coca-Cola and Lowe's that have been paying dividends and increasing dividends at that rate for decades. I mean, longer than I've been alive, they've been paying dividends on a consistent basis. Plenty of companies can do that and have done that. But there have also been companies that have had to pause their dividend. Ford famously restarted their dividend, I think earlier this year, if not last year. And at one point, especially during the Great Recession, they said, look, hey, we're not making enough money, we have to pause dividends and just not do them for a period of time. So you have to be very careful. There are some companies that pay dividends but don't necessarily grow. So you're getting your $1 or $2 a share, if that, and then you turn around and look and you realize like, hey, I have to have millions of dollars to just get $20,000 of dividends every year, and those dividends are not always consistent. Sometimes that dividend goes up, it goes down, it gets cut. Things happen, but you don't just solely want to chase stocks that have dividends just for dividend's sake. To me, I've always treated them as a bonus. If I look at a company, I like a company, I see if they are growing and they pay a dividend, great, I'll take the dividend. But I'm not going to say, oh, you don't pay a dividend and just throw it to the side. There are plenty of companies that have done quite well, Alphabet being one of those, that's never paid a dividend. On the opposite side, you have companies that have always paid a dividend and just haven't been the most profitable companies in terms from an investor's perspective. So be careful, watch out for the dividend trap. Again, I'll make sure that you can go back and watch the original video because I went through the math of how the dividend trap works, and it is definitely worth a watch. Okay, now the last one is performance chasing, and this is something that I feel like people fall into all the time. It definitely happens probably more in the crypto space now than what it does in the stock market space. But this happens, I mean, you can say GameStop, AMC, or what have you. Once you start to see a stock take off, people just pile into it just for the sake of, hey, the stock is up. That is not how investing should work. And the reason why this is dangerous and the reason why you want to avoid it is because when you do that, you usually do not know why you are investing in a company. The other thing is, and this is probably most dangerous, is that you start to become overconfident about it and you start to create your own reasons as to why you think this stock is going to continuously go up. The stock market doesn't work like that. What you don't want to do is buy something and then create in your own imagination as to why it should continue moving in that direction. What you want to do is do your research and figure out why you think it's going to go well and then hop into it, as opposed to, oh, it's up 15%, it's up 50%, it's up 1,000%, and then just make up a reason as to why it should continue to do that. That doesn't work. The reason why it doesn't work is because there are a lot of reasons why a stock could take off. Sometimes it's just because of a meme, sometimes it's for a legitimate reason, but when you make up your own reason and follow and just jump into something, that's not going to help you, right? Because you're not truly going to understand what is going on. What are the fundamentals of the company? So we can talk about Caterpillar, right? Now, Caterpillar was down as of yesterday when we talked about it. However, we have done our research. You can watch all the videos we've talked about, the infrastructure bill. It makes sense as to why that company would take off, right? And maybe not this year, but in the next few years, I can see that. Right? I have a reason, we've done research, and there are reasons to validate it. Now, if you were to invest in GameStop right now or AMC, and just because it took off and it's up 30% for no real reason, that's an issue, because you jump into it and you say, well, why? Like, well, it's innovative company and movies. Like that doesn't make sense. Very similar to Twitter, right? When Twitter came out, when Elon was trying to buy Twitter took off a little bit, and I said, hey, look, the research says this, what we know about this person, what we know about the company says this, but some people piled into Twitter anyway, just because for a short time being, the stock went up, and then we saw what happened in the lawsuits, and we'll see how that concludes. But again, you don't want to chase dividends just because. You also don't want to chase returns just because. We have even talked here, and I will recall, go back to the Dillard's video. Now this is a while back. It's a deep cut. Dillard's, it's a company. Their ticker symbol is DDS. And at the time, I'll post a screenshot from that video. I have to dig to find that one. But in either case, Dillard's was up. And I'm pulling this from memory. It's like 60 some odd %, some crazy number over the time that we pulled it up. Like, go back and watch that one. And I'll tell you, back then I said, look, at that point in time, I didn't even want to chase the stock because I'm like, it's up, but I really don't understand why it's up. I decided not to invest in it. I did not want to just hop on to something that had taken off without truly understanding it. When you chase stuff, you get burned 9 times out of 10. Okay, so the other thing with chasing is, again, you can start to chase things and you start to become overconfident and you just think it's just supposed to go up just because it did yesterday or a week or two ago. That's not how you want to approach your investing, especially as a beginner. You don't want to do that in either case, but definitely as an investor, it's definitely something you want to avoid. So do not chase returns, do not chase dividends, and do not become overconfident, okay? Everything that you do in investing is contextual. Okay, and the reason why I say that is because, for example, I was somebody, I've been on record for years. ExxonMobil used to be a terrible stock, okay? But I was not overconfident in saying that this stock is going to fall forever and ever, because this year is one of the best stocks out there, okay? So you can say, like, hey, during this period, not something I would invest in right now, right? Until things change, I may or may not come back and revisit. And I say that all the time. I may come back and revisit Disney, even though I sold it, right? I may come back. I revisited T-Mobile, right? I got out of T-Mobile about 2 years ago. Things didn't go well, and now things are going well, and now I'm back in T-Mobile, right? So take your time, figure out what works. Don't become overconfident. Do not chase dividends, and you surely don't want to chase performance. All right, what are your mistakes? What are some things that you've run into as an investor yourself? I will share my mistake. I wonder if I should do it in the comments or should do it here. I guess I'll do it here. So my investment mistake, this was 2011, I think, junior year of college. Had a finance professor, and he was, you know, richer and smarter than I was. At least I felt at that point in time. I was a college student, so it wasn't hard to be richer than me. And he was talking about the stock market. I was like slowly kind of getting into it. It was my first year doing building bread, and at that time I wasn't doing investing. I had just finished my internship. I'm still figuring out the investing space, more so talking about budgeting, credit scores, and all that type of stuff at that point in time. And it said, hey, buy Citigroup, buy any bank that has fallen off because of the 2008 recession. The banks are going to always be here. They have to bounce back at some point. So I took $300, which was a whole lot of money back then, put it all in Citi. Now, why did I do that? I did it without any research, which, you know, I was overconfident in what the professor told me. I jumped into it and then ended up selling like 3 or 4 weeks later. My mistake here was that I, again, did not research, a little overconfident in what he was telling me, and I didn't have context, didn't have history, and I just did something. I spent money on something and lost money because I didn't understand how the market worked. So those are the things that you want to avoid. Let me know what your biggest mistake so far is in the market. My job here is to help you to avoid more of those mistakes. All right. Also, if you want to be a better, more informed investor, make sure you check out the members only. We do breakdowns and videos and exclusive Q&As every single week. Every week you get a brand new video as a part of the members only. Sometimes you even get 2 videos a week like they did last week. So this week I'm looking forward to doing a deep dive into waste management. That one is ticker symbol WM. It's a lot to look into, so I'll be looking to do that over the next 2 to 3 days as I get into it and really kind of dig through their reports and everything else. Is something I guarantee you definitely want to check out. So click right here below to join the members only. Make sure you hit the like and subscribe button and leave a comment. What has been your biggest investing mistake so far? I've had a lot of mistakes, tongue twisting my words today. All right, that's it for me. I'll talk to you tomorrow. Bye.